Let me talk a minute about the process. Kim mentioned the process for you. Here's what we need to do as a group. You're going to take my class over the next 4 days, and you're going to think I talk too fast, which I do. But here's the deal. Everything's recorded and it's going to be hung in the forum. So you're going to have access to that indefinitely. What I would like you to do is take advantage of the teaching while it's fresh in your head and go back and review the recordings for the next 2 weeks. There will not be a boot camp next Sunday because you have the fresh recordings to access for the next 2 weeks. They're not coming down, but I want you to set your window for the next 2 weeks to watch these recordings as many times as you could fit it in. I know it's a lot of work. But obviously you could look at your tape and speed up through the introductions and speed up through the breaks and the parts so it'll go faster than the actual class. Okay, second. After the recordings, you've watched them, you're going to have access to the DMR for 1 month. For the entire month of June, when this class is over, you will have access to the DMR. You need to get in there and see what these guys are doing. They're going to give you biases. They're going to help you understand market maker direction. They're going to help you understand levels, things that you're going to be confused about. Take advantage of the free trial. If you like what you see, then obviously you need to continue that when the trial is over. But here's the process. Watch the recordings, DMR free month. As soon as that is over, I'm working with Zen and Casey and Kanan for the new people. You're going to get emailed a link to the boot camp that I just did. It's an 8 or 10 week run. I think I'm on week 9 or 10. We have 1 more week left after the class. That'll be recorded as well. I'm going to take a 2-month break. During the break, the new guys should get caught up and handle their boot camp. Okay, so we're going to set it up to where you get a link every week in your inbox. You watch the boot camps and get yourself caught up. And then come Labor Day, I'm taking off till after Labor Day. Come Labor Day, when we start a new round of boot camps, everyone will be caught up and on the same page. Okay? That's the process. Now you just need to hit it out of the park. Okay, look, welcome to the family. I'm excited you guys are here. It's different in here. You have to understand that the comfort is in here. You're not going to walk out of this room and tell anybody what you learned or what you do. They're not going to understand. If you're looking for help, seek it inside the forum or through me or through one of my staff. I promise you, what I have for you this week is going to be different. Now, the sales stuff is over, okay? I promise you that I'm going to deliver to you 1,000% of my heart and soul over the next 4 days. I'm going to give it to you. I'm going to leave it all out. Everything on the table, my friends. There's no secret indicator that Steve doesn't share. There's no bullshit stuff or stuff that Steve doesn't tell you. I am leaving it all on the table. And you will see that by Wednesday night. What I want you to do is meet me with the same level of energy that I'm going to meet you. I want you to roll up your sleeves. I want you to put your rainbow stochastics, your MACD dots, your crossovers, your bullshit. I want you to get rid of it. I want it off your charts. And I don't want to see nothing but my stuff on your charts for the first 6 months of your training. All right? I'm tired of people sending me mocked up charts and go, I don't see it. And they have some bastardized method of my boxes and some rainbow stochastics and some garbage and some dots and some crap and some sand spurs. I don't want to see that stuff. I'm asking you to meet me with 1,000% energy for the next 4 days and then continue that energy maybe at 998%. I want you to meet me with a high level of energy. I need you to be a blank canvas right now. I need you to erase all the crap in your mind. And I need you to trust me for the next 4 days, for the next 6 months, and with the rest of your life and your trading career. That's what I'm asking from you. Okay? So here's the first part of that. No trading this week for you new guys. Why? Money clouds your judgment, especially if you lose some. Okay? I don't want you looking at price action in terms of dollars and cents. I want you looking at it in terms of behavior, what the market maker is doing, and how he's acting at certain levels. If you can put aside the money and master his behavior, the money will fall into your lap like an ATM machine gone awry. It will spit it out at you. But you got to make the commitment to me right now. Okay, I want every one of you that's new to hold out your pinky, and I'm holding mine out. We're making a pinky swear together. You're going to bring it for the next 4 days and for the next 6 months. That's what I want from you. I'm going to bring it. I want you to bring it. Okay? Second thing I need from you. I need you to put aside everything that you think you know about the markets. Because it's BS. I want you to open your mind to the possibility that there is in fact something bigger going on. I've illustrated for you in the sales presentation, and I'm going to further illustrate it for you over the next 4 days. Allow yourself to capitalize on this opportunity and to have success. That's why you're here. You didn't throw $5,000 at me to say like, oh, let me see what this guy's up to. That's not why you came here. You came here for me to straighten you out in the trading business. And I'm going to do it. But you got to open your mind and allow me in. You got to let me in. That's the biggest problem as far as the psychological aspect of the business, is that you're resistant to what I'm telling you and you don't want to let it in. If you could just open your heart and your mind and put aside everything else, let the information soak in, think about it, look at it on the chart, absent of money, or in the absence of worrying about money, you're going to start to see results. This last one is very important. Don't try to mix systems into this. You know, I always joke and bust his chops, Dave. I think he's in Israel still, but he adds a slingshot and some other stuff, and it was driving him crazy, and finally he got rid of all that. But here's the deal. Don't go, oh, I see Steve's stuff, but I've added a slingshot, rainbow stochastic, backside, MACD, double RSI, triple line, then I really see it. I really don't want you to do that. If indicators worked, you wouldn't be in here with me right now. If that shit worked, you wouldn't need my class. And I could say, use the slingshot and see you guys later. I'm offering you a deeper understanding of the behavior, and you have to see it for what it is, the purity of the price action and their behaviors at certain levels and what they do on a regular basis, absent of indicators, absent of lines and garbage on the chart. I want you to learn the pattern, the pattern, the pattern. Okay? All right. This is for the regular class. Place cell phones on vibrate. You don't have to need that. Okay. I'm going to insist that you take some notes. I don't have a book. I don't have a textbook. For safety reasons for me personally, and also because if you write stuff down and take notes, something happens from your hand transferring to your brain. When you put it on that paper, it helps you remember stuff that I said. If you're confused about a section, mark the tape for your review. If you're confused that Steve said to throw out your rainbow stochastics at 6:15 Eastern Time, mark the tape and go back and listen to it. That 2 minutes ago, Steve said, oh, I need to throw out rainbow stochastics. You get the point. Mark the tape. Okay, if you're still confused after reviewing the tape, I'll go over it again at the end of the class when I take questions. For all you retakes, please don't ask me stuff about levels and stuff I haven't covered yet. Write the question down, and when I get to the section, I'll cover it for you. You know my goal is to leave no student behind, no stone unturned. All right, we all paid to be here. Be courteous to each other. Everyone learns at a different pace. If I get going too fast, don't feel ashamed to ask me to slow down or wait up for you. I have no problem with that. But if it's something that you can get out of the tape, please do that. I'm here for every single one of you, each of you. You have my attention. Okay? Whatever you need, send me an email. Okay, housekeeping. We're going to start every night at 6. And after tonight, I know it's the introductions and all that's taking a little longer, but trust me, we're on pace. We're going to take about a 10-minute break every hour. And then we're going to take a 30-minute break 2 hours in. Everyone can grab something to eat, shake it off. We'll finish up around 10:30. And if we need to go over, we're going over. If you're in a part of the world where it's getting too late, that's what the recording's for. You can watch the last half hour or whatever it is. Okay? The first night, it's just going to be me. I'm going to lay it all out for you. The second, third, and fourth night, we will have some guest speakers. I haven't even asked them, but I just assume they're going to be here. We're going to let Carr, Kim, Ray, and Jim do a DMR session on Wednesday. On Tuesday, on Monday or Tuesday, I'm not sure, Zen will show how to trade the U.S. session in his way. And I think Jim is going to do a individual presentation. I'll get all the details hammered out for you guys. What we're going to do is we'll go to about 10:15 in the last half hour or so. Carr, Jim, Zen will present their concepts and views on, or their take on my method, which will help you in turn see it from a different perspective. So I'll get the days hammered out, and that'll be posted tomorrow for you guys to know. Tonight's just me. You're stuck with me for a couple hours, all right? My most successful students have done all of the R&D, or homework. Some still do R&D when there's nothing going on. They look at charts and they analyze their stuff. There should be a glossary that everybody got. It's in the forum. It should be in your student folder. Print it out and keep it handy for the next 4 days. If you haven't looked at the glossary, or if you're a last-minute sign-up, you need to have the glossary of terms. It's some of the things that I say. Outside structure, spike. I say some terms that are new to this group or new to the industry. If you've never heard them, there's a glossary for them, okay? All right, that's what it looks like. You should have it. Okay. All right. Pop quiz. Okay, some of you seen this, so no cheating. You new students, we're going to take a quick quiz. And when the quiz is over, we'll go over it, we'll grade it, and we'll talk about some of the things. What I actually think I'm going to do is I think I'm going to take the quiz, and then I'll answer it at the end of the night. I think we're going to do it that way, because some of you seen the quiz. I don't want to spend a lot of time on it, but you new guys have not seen it. So here's what we'll do. I'll give you the pop quiz. There's 2 pages. I'll do 5 minutes a page. It's enough time to go through. I'm not trying to make you feel stupid. I'm not trying to make you feel like you don't know anything, but I want you to read these questions, answer the best that you can, and then I want you to take notes and write in the answer as it comes to you during the next couple of days, okay? All right, so with that, let me put the quiz up. And I'll be quiet for 5 minutes, if at all possible. Okay, so here we go. Okay. Answer as many as you can. Starting now. I'll be quiet. All right. Hopefully you wrote these questions down. Answer as many as you can. And I promise you over the next few days, the answers will pop up. Keep the quiz next to you. Write in the answers as we go along. So the reason we're all here, how to learn how to beat the market maker. Okay? In order to beat these guys, you got to understand how they work and what their objectives are. Okay? Objective 1. Induce traders to take positions. If you put your money in the account and don't execute an order or don't click the mouse, the money is of no value to them. So here's what has to happen. So how does the dealer induce you to take a position? There's a thing called circular trading. Is where the dealers trade amongst themselves. Back and forth, bank to bank, dealer to dealer. I'll sell you 100 million euros and then I promise to buy it back in a few minutes. They don't pay spread. They don't pay commissions. It doesn't cost them anything to execute these orders. They move the money back and forth in a circular pattern, and it creates a small, tight accumulation zone. They might use wide range swings. News releases, the spike you saw in non-farm on Friday. Just remember that until you commit your money to a trade, it's of no use to the dealer. Their second objective is to create panic from fear and greed, to try to get you to think irrationally. How do they do that? News releases, non-farm numbers going against what's really true. They say, oh, the U.S. economy is great, and the dollar still loses value. The payroll numbers are favorable, yet the price doesn't go like you thought. Or they hit the stops with monster spikes in both directions, like they did, and then close in the mid-level. These behaviors create panic and fear that you're going to miss something, that you're losing out. Maybe that your stop will get hit, so you lift it. It's a form of like inexplicable price behavior. How can price go up in euro if the EU is having so many problems? How can price go down in the U.S. economy if they say that it's doing great? It's inexplicable price behavior. Another thing that I've seen that's happened to several people that's absolutely crazy is you're just minding your business, sitting there looking at the chart, you're in something, and out of nowhere, a 50, 60, 70 pip spike will come out of nowhere right before they settle for the day, maybe at 3, 4 in the afternoon. Some people have sent me pictures of this. This is this crap that I'm talking about. It's inexplicable price behavior to hit your stops, create you into a panic, to get you nervous, to lift your stop, or to make you feel like you're missing out on something, the greed aspect of your personality. Some of you have more, some of you have less of that. Okay, and object 3, hit the stops and clear the board. Force you into margin trouble and pocket your money. That's the bottom line. They're here for one reason. Well, 2 reasons. They make the market and take your money. That's their reasons. Okay, so they'll fill your order, but in the back of their mind, they're always thinking, man, I'm going to end up with this guy's account. That's what they get paid for. Okay. In order to beat the dealer, you got to know what he's capable of. I'm going to show you some slides. Some of you have seen these before, some of you have not. They're taken from the MT4 Manager's Operation, or the dealer's handbook. And what they are, in essence, is a book of how he should take your money, or how he can take your money. Alright, so some of you are thinking like, what do you mean there's a book? When did this happen? Did you think that they're going to have hundreds of millions of dollars in their charge, and there's no way or no set of rules for them to take the money from you? It's their job. They're professionals. I'm going to show you some pictures in a few minutes that are going to make you sick. Market makers can requote you at will. Okay? See this right here? They could reject your order, or they could let it go through. Did you ever have a big order on and it wouldn't get filled? Probably a Subio, Abo. They keep requoting you. This is why. They don't want to give you a good price, so they just simply reject the order. They can trigger all the stops in a range. Okay? They simply check the box stop out, and they hit OK. And they can grab the stops at a certain price level. So if they see the stops that the collective herd is placed at, 2802, they could type in, grab the stops at 2802 by 05 or 07, and they can grab that range. Or they could say, grab all stops. Unlimited. Check the box, fill the field, and hit it. They can toy with the spread. How many of you have been using EAs and garbage and don't understand why the spread opens, or if you're using a scalper and the spread opens up and you get the order active but you can't hit the take profit side? This is why. They simply take this little slider and they open it up on your account, and this will not allow you to hit your take profit side. That's why scalpers work sometimes in demo, because they don't do this in demo. And then when you put your real money on the line, it won't work. I got a letter from somebody that told me that they were doing really well with an expert advisor until Friday, and the thing ate up half of their account. Okay, so understand that they let her do pretty well. They let it build up, and then they helped themselves to all the money and then some. Okay? Also, this one makes me sick. They can refresh the chart, change the bar price, the high or low of a period, by simply using this tool. Okay? They can go in. Let's say that there was a spike and it was for whatever reason not supposed to be there. They can change these numbers, refresh the chart, put the bar where it needs to be in line with price action. Terrible. Okay, I know it sounds hopeless, some of you are saying that, but the good news is the U.S. is cracking down on this stuff and regulating it, and they're getting a handle on this stuff. Okay, market makers know who's in margin trouble. Do you think they have no idea what's going on? If your account is in trouble, they have a plugin that lets them know, man, we got all these accounts right on the fence. This window is where the straightaway trade comes from. Now the new guys don't know what that is. I'm going to show you what a straightaway is for the next couple of days. The straightaway is when the dealer does not repeat the level. He has to get the hell out of there and finish these people that are on the fence. In essence, he's standing on everyone's throat right here, and he has to finish them. How does he finish them? Straight rise or straight correction out of an area of price for the people that are in margin trouble to flash them out red and take your account. So he knows how many accounts he's going to take by a certain behavior. This is just a small sample. Let's say there's 1,000 accounts that are in margin trouble. If he has 1,000 accounts in margin trouble, if he repeats the level, if he comes back and allows those people, think about this for a minute. How many times have you told yourself, man, if I hit +1 or +5, I'm out of this bad trade. I'll be happy just to get out. How many times have you said that to yourself? Well, guess what? The market maker will not repeat that level because he knows that this is your mentality. And since he knows that if he repeats the level, 500 of those 1,000 accounts will click out, he straight rises away from that area or straight corrects away from that area. That's where the straightaway trade comes from. And this window is the exact reason why that behavior happens. Okay? So when you see the straightaway developing, you know that a bunch of people got crushed. He flashed them red and took them out. So when you see a straightaway, feel pity in your heart for those people. Okay. So the dealer also uses risk management. Here's what happens. The dealer has his pool of liquidity, and then there's true interbank market is the best way to say it. The dealer takes his net longs and net shorts and sees what his uncovered risk is. His job is to try to keep his books balanced and manage his risk. So if I have uncovered longs, I will bundle the balance up and actually sell it off into the real interbank market or pawn it off on the bigger dealers. My job as a market maker is to keep my books balanced and not get myself into margin trouble or get myself into such a big uncovered position that I can't cover it with my own liquidity, but what I have available to me. So they have their risk management profile, which is they look at their open orders or open float. They try to keep a balance, and if there's a big balance, they will offload those positions to a larger dealer. Okay? All right, to sum it all up, this is what they're looking at. This is their desktop manager. What I was taught was that if you come to the dealer and put in a deposit and you're new, they'll watch you for a few days and keep an eye on you and see if you know something. And then they'll say, this guy sucks, don't worry about him. He's going to lose his money in 3 months. Don't sweat it. And that's what happens. They don't worry about you anymore. So who's looking at these things? Who's looking at these? That's who's looking at these screens. That's who's keeping an eye on what's going on. That's what you're up against. Okay? Smaller firms. Okay? How many market makers are there? Hundreds. In all different market segments. So if you ever thought there was no such thing as a market maker, there's all the desks around the world. Okay? This is what you're trading against. Alright, there's the one I showed you, just a monster room of UBS. Okay, now, understand this is not a game or a hobby for them. They're lying in wait for you to make a stupid, uneducated, emotional decision. If you've been treating trading like a hobby, I recommend photography, my friends. It's cheaper. Except for my wife. She manages to find the most expensive cameras and flash bulbs, and I don't know how she does it. Anyway, it's another story. If you think that you're just going to come in here and trade against these guys without any formal education or understanding of what's going on, you're in for a rude awakening. You have to trade in line with the dealer in order to beat the dealer. Okay, so the dealer has some various trap moves, things that he will set for the retail and small hedge fund traders. And they are, the trap moves are made at the beginning of the week, Sunday and Monday. They're made at the beginning of the day, during the Asian accumulation phase. The beginning of the session. Okay, start of Asia, start of London, start of US. The end of the session, when one session ends, there's a gap time and another session starts. When the dealers are passing off information during the gap time, there's an answer to one of your quiz questions. He gives the orders to the next guy coming on of what he's accomplished and where he's at. And he will continue the trend or make the trap move. The end of the day and the end of the week. Trap move on Friday to hold traders over the weekend and hit them with the gap coming Sunday night, Monday. The end of the day. Go back into consolidation at mid-level to leave higher level longs and lower level shorts stuck so their book is not at zero. Okay? These are the traps when they're set. Okay, beginning of the week. You have the double spacer. You have your double spacer, which is Sunday going into Monday. The dealer sets the high, works it. He comes near it. Anybody that got stuck long is now stuck for the week. He moves away. Trap move Sunday, Monday. False move week beginning. Part of the cycle. Okay, beginning of the session. Pick up the breakout traders. Make the move at London Open. Okay, end of the week. Here's your double tracer starting the next week. This is Friday. Okay, late in the day, the dealer induces people mid-US session to take a short position, snatches it away, and ends the day in a trap. So if you're holding something on Friday and it goes up to, I don't know, let's say you're holding something and it peaks at 80, 90, 100 pips and it starts to pull back and you see sideways consolidation. That is the trap to hold lower level shorts in this example stuck until Sunday, Monday, where they can hit their stops and jam those traders up and take back the profits. Okay, so if you are in this trade and you were short, you caught this beautiful move here off the mayonnaise and you were good to go, and the dealer issues a hammer late in the day and goes into consolidation, this is a take right here. This is a take profit. You're out. You're not carrying this trade over to Sunday, Monday. Stupid. Don't do it. Okay? Trap higher level longs at the end of the day. Same thing I just showed you. Going into Friday and they hit them with the gap. They got them. Okay? Alright, so let's break down a weekly structure. False move, weak beginning. The dealer spikes high. Pulls away from that area. Induces people to go short. Builds up some level of shorts. Anyone that was long stops or triggered. He also pushes down. He allows those short orders that perhaps some pendings were set outside of here. He picks up those pendings and drags them backwards. Anyone that said, oh, if he breaks the weekly low on Sunday, Monday, on Tuesday, I'll take it. Well, guess what? You took it all right. The dealer will then rise for 2.5 to 3 days and for 3 levels. He will then make an aggressive, volatile move, which is dubbed risk appetite and volatility, and make a mid-week reversal. The mid-week reversal is the anchor point for the dealer trend. Okay? There's a trade that comes out of the midweek reversal or out of the dealer anchor point. It's called the safety trade. We will talk about it. Okay? The dealer will then make a unidirectional swing away from either peak formation, high or low, and end the week on a trap right here. See, ends the week on a trap with the spike in the consolidation. Okay? Here's your peak formation high. Midweek reversal. This cycle, this dealer cycle that I'm going to explain, is the reason you don't have to spend hours and hours and hours looking at technicals. You don't have to draw support and resistance and lines and crap and fibs and lightning bolts, and you don't have to do it. You have to simply analyze the chart, understand where you are in the dealer weekly cycle, and trade away. In fact, my goal for you in the next 6 months is to be able to walk up to any market chart and know the directional bias of the dealer in an instant. How can you do that? Steve, that doesn't even seem possible. I got to spend hours analyzing the chart. No, you don't. That's a myth. That's bullshit that the textbooks have stuffed down your throat, that you got to spend hours analyzing the chart. The dealer has a specific cycle. I'm going to lay it out for you in great detail today. You trade after the stop hunt in line with the dealer trend. That's it. So your job is to walk up to a chart, identify the count, the stop hunt, and you trade. On any market, you can walk up to a gold chart, silver, futures, oil, corn, rice. I don't care. When you see the chart, you should be able to identify where you are in the cycle, where the stop hunts have occurred, and you trade in line with the dealer cycle after the stop hunt. That's it. Simple. No hours on end of garbage of drawing lines on your chart all the way back to 1907 that the euro held here one time and bounced off of that garbage. It's a waste of your time. Okay? Alright, so market makers will trap traders on the first day of the trading week and tie up your margin for the remaining days by aggressively moving away from the low of the week or the high of the week. They will trade above or below the previous peak, possibly using as a high or low of the current week. What do I mean? If they made a peak formation low or high last week, they'll trade above that peak or below that peak and not allow traders to escape. Okay? This is what I mean. They were trading high here. They came down. They tapped the level again. This is the end of the week. This is the new week. They traded below this zone, but they used money grabs or spikes They shifted the zone away, and then if you notice, the people that were trapped here or that are trapped here were not allowed to see a profit because that was the area that was repeated. So once they issue the spike and shift the zone away from higher level long holders, they will not see a profit for the rest of the week at a minimum. So if you've ever nursed a trade for 3, 5, 7, 10 days, 20 days, this is the reason. If you were long over here and you said, oh crap, honey, I can't afford to take this loss. I'm going to go ahead and lift my stop and ride it out. Not a recommended strategy, by the way. The dealer saw to it that you did not book a profit between 5 and 7 days. Why? You're human. You have the human condition. You have work. You have a body that needs sleep, hunger. You cannot nurse a trade for an endless amount of time. In about 2 to 3 days, most people give up and click out and turn their margin over to the dealer. Now you understand. There's a bigger cycle at work. There's something bigger going on. The dealers will not repeat the level because in essence people will click out of something. So they come near the level, and what happens when they come near the level? I didn't sit here for 3.5 days to come out -5. I'm right there. I'm going to get out with some money. And then lo and behold, he corrects it away again. Okay? It's a dirty game, my friends, but that's how it's played. Okay? So, back to the structure. You have the accumulation phase of the week and of the session. Asia is the accumulation phase of the day. The Asian session is the accumulation phase of the day. The Asian session, or Sunday, Monday, the first 8 hours of the market open, is the accumulation phase of the week. The dealer will set the psychological support and resistance levels here and here and exploit those levels against the retail traders who have taken positions or are holding from last week or holding for the last month for who knows how long they're holding. Once the dealer exploits the level, let's say in this example the dealer extended the psychological low. He induced traders to take a short position. It's visible on the chart by the 50 crossing the 200, the 513 showing extension and downward movement. Traders that take normal retail signals are short now. The dealer will quickly spike the low, pick up any orders, and go into consolidation. This area here is another accumulation phase. By holding that level, he is inducing people to continue to pile on short. He then makes his trend move, slow and steady rise, away from the peak formation low that is formed here. This becomes the LOW, or peak formation low, which is known as the low of the week. Okay, LOW. Okay, so look. Once the peak formation low or low of the week is formed, the dealer will trade away for 2 to 3 days. He trades away from that level. Here's what he does. He'll do a rise and go into consolidation to end the day. Now, the straightaway trade comes out of level 1 consolidation most often. Can there be a straightaway in other places? Of course. But what is a straightaway trade? Go back 6 or 7 slides. Remember I showed you the margin window? Remember I showed you the window that was like, oh man, all these people are on the fence at 34%. Maybe their margin call is 25%. They're 14% away. They're right there. Remember that window? Okay, well, here's the deal. If he knows he's got people on the fence, he will not make a visible stop hunt below the blue box and repeat the level by coming down in here. If he comes down in here, he lets go of all the traders that are short in this aggregate and allows them to book a profit and get out of margin trouble. The dealer is not in the business of letting you or anyone you know out of margin trouble. His job is to step on your throat and stick you in the heart. When he's got you down, he finishes you. So if you are in margin trouble, the straightaway trade is probably what's coming next. Because if you got in margin trouble like everyone else, collectively you saw signals that retail traders take, then you probably got in margin trouble as a collective. And the dealer knew this, and he had you by the throat. He then straight rises with very, very little stop hunt. Straight rises out of the area and finishes everybody that was in trouble in here. And he will flash you out red and end it for you. He now has your money, and he'll take it and go to Aspen with it. Okay? So once the peak formation low is formed, you expect a straight rise. You expect a straight rise out of here. He gives it to you. Okay? You do not counter trend coming out of here. Do not trade back towards the peak coming out of level 1. It's a sucker's play. Because most of the time the dealer will issue the straight rise or straight fall out of that zone. Okay? He ends the day in a chop back in consolidation. Maybe he's handling some crosses here. But what do we expect for 2 more days? Stop hunt low rise. He gives it. Stop hunt low rise. Now, some of you fall for this right here and get snagged. That's okay. But I want you to try to keep in mind that in addition to the dealer cycle, he has to line up some technicals for regular traders to see. He has to validate those orders to make the traders think that their system works and that they can make some money out of the business. He's not sweating it because he's going to get it back. So what he'll do is he'll follow in line with the trend for a couple days. On day 2, I'll talk about this in more detail, is when the retail trader signals most of the time will line up. Day 2 of the market maker cycle. Day 3, he will show angle, separation, or acceleration. Some of you know Bill Williams. This is called a gator, where you have trend acceleration. And then he will go into what we call level 3. He will put the brakes on and trap high. This is an outside structure to the high. The dealer corrects to get his money back. Okay? If you're a swing trader, you book in level 3. If you're a day trader and you took the position here, you book in level 3. Just because you took a swing trade doesn't mean it's going to go 1,000 pips. The cycle is 2.5 to 3 days. Unless I know that it's different right now. They've been shifting the zone, and I'll talk about the bigger moves that have come out. But if you look at the bigger moves on the bigger charts, it's the same exact thing. Okay? All right, so as a trader, you have to understand how to read these market moves. You have to anticipate when and how they're going to present. And then, and only then, you can truly beat the market maker by understanding his cycle and trading in line with him. For you new guys, I want you to always look to take your profit at session changeover. Especially you new guys. Here's why. Some of you are going to struggle with the levels, not quite understand how to count the levels. You're a little confused. Well, if you catch a trade, if you catch stop hunt high drop or stop hunt low rise, and you have a nice profit, you start getting into the red box area, New York, look to take your profit. Because most of the time the dealer will reverse coming out of New York and end the day back in consolidation. I'm going to lay the pattern out for you. But understand, just because you have a profit in London does not mean it will continue. There is a New York reversal. So the dealer can end the day with traps high and traps low and go into consolidation and continue to collect contracts. If the trade does not see substantial profit in 2 hours, take profit or small loss. There's your time stop answer on your quiz. If you are in a trade and you took a V bottom or V top and the second leg presents itself, here's what I mean. Okay, you had your accumulation phase during Asia. The dealer made a stop hunt low and rise, and you took the V. And then he goes into mid-level consolidation and then repeats the level in New York and does not break it. You now have a W. If you're still in the trade and have not been stopped out, restart the clock for your 2-hour time horizon right here. Okay? See it? Okay, so you restart the clock if a second leg presents itself. There's 3 market makers positioned strategically around the world. There's more than that, but most of the firms incorporate 3 to 5 people. Essentially what it is 1 for each time zone. So when you're exhausted and you're sitting there with your stop off and you're sitting there nursing a trade, you're dying, you're drinking Red Bull, there's a pile of empty cans next to you, you haven't had a shower in 3 or 4 days, you stink, you haven't talked to your wife or your kids because you're locked in your office hoping it comes back. A new guy is coming on changing shifts. Another guy's coming on changing shifts. They don't have to fight the human condition, the conditions that you're up against. That's why beating yourself up, nursing bad trades, are all things that will lead to your destruction in the business. You simply understand the market maker and his behaviors. You walk up to any chart in any market condition. Very important to understand. Some people have wrote and said, oh, there's been a big correction and they shifted the zone and I don't understand. Within those big zone shifts, there have been my patterns present. We'll look at it here this week. The new guy comes on, he has a new set of objectives. His objective is not to let you turn a profit. His objective is to collect more contracts and keep price away from the previous batch of trap traders. Okay? Understand. Once the market maker trend is established, it will continue for 2 sessions, with the 3rd session being corrective in nature. The trend direction will resume after the dealer books a profit, whether it's small, large, or whatever it is. So here's what I mean, okay? Corrective in nature doesn't mean it's going to go down. It means it's going to correct against the current trend. So let's say that we have the accumulation phase, and he stop hunt low rise 1 session, stop hunt low rise the 2nd session. We can expect the 3rd session to go against the prevailing trend, corrective in nature. But he will disguise this as a accumulation and stop hunt. Okay, so he'll do this, and then the session or the trend will resume. Okay? The opposite. So this piece right here obviously is corrective in nature because it was down. 1, 2, correct. 1, 2, continuation. Okay, so now, if the dealer stop on high drop, next session, corrective in nature. Well, that's a rise, that's not corrective. It's a correction against the existing trend. The 3rd session will be corrective in nature. He'll end in consolidation, disguise part of it as a stop hunt and continuation. Okay? If 3 consecutive sessions show rise or correction, the dealer will book on a stop hunt, most likely coming out of Asia or London. If he rises Asia, London, and New York, he's exceeded the ADR because he's been running straight up or straight down. So now, he means if he's rising price, 1 of 2 things is happening. He's either making money from previous orders booked or he's collecting new contracts in that direction. The next session will be corrective in nature, and it usually will occur during Asia and London, and it will be disguised as the stop hunt. He will make an aggressive stop hunt, part of the accumulation phase, and then drop 25 to 50 pips above or below the box, and tying those 2 items together will give him the opportunity to book. Okay? All right, extended rise, 3 levels. If there's 3 levels of drop, intraday, intra-week, you're looking for the correction. Or 3 levels of rise, you're looking for the correction. If there's 3 levels of drop, you're looking for a rise. The 50 EMA should be used as the first take profit in these trades. So if you're trading counter to the dealer trend, let's say intraday, peak formation high, the dealer drops. Peak formation high, the dealer drops, and he gives you 3 pushes. 3 levels. There's 3 levels in the dealer trend. 1, 2, and 3. If you see 3 levels of drop and the dealer goes into accumulation, okay, the average is lagged. The 50 is going to be around here somewhere, and the 200 is going to be around here somewhere. The 50 EMA. Okay? 200 EMA. So what's going to happen? Stop, hunt low, back into the range, end the day in consolidation. The 50 should be used as your first take profit with the 200 as your second. If he doesn't hit the 200 and goes into consolidation, take your profits. Take it. Take it off. What happens is with the averages, like, oh, the 50% fib, Jim Nicholson, and the, I got to bust his chops every class, man. The 50% fib or the mid-level consolidation sometimes is on the fib, but what it is essentially is the high of the day minus the low of the day will give you some number of pips. Because I'm terrible at math in front of large audiences, let's just say it's 100, all right? So if you had the high of the day and the low of the day, and this range is 100 pips, okay, what can you expect? You can expect the dealer to go back into consolidation or next accumulation phase in the middle of the level. Why, Steve? Because I told you higher level longs, lower level shorts trapped. The dealer will do this and end the day in consolidation. So if you take the high minus the low, 100 pips divided by 2 is 50. That gives you approximately where the next accumulation phase will start going into the Asian session. So if you're trading counter to the dealer cycle, if the dealer has made a peak formation high and formed the high of the day, and then he corrected out big, and then he makes the W or a V bottom and starts to rise, you can expect there to be about 50 pips on the table for you in this example if there's 100. If it's a higher ADR, then there might be 60 or 75 pips. Now, understand you're going to deal late. You're going to get in, so it's reasonable to take between 30 and 50 pips off at the blue watermark, which is the 50 EMA. And Zen's going to give you some details on how his targets are and what he trades for the U.S. session. Okay?